Good morning. This is Jim Barlow of OakTree Premium Finance. You can see my my header. I'm using the header I'm using for my new presentation that I'm doing, monthly presentations, dinner meetings. The Alchemist, it has a different title, the other one, but I'm claiming to be the Alchemist. I've wanted to do this presentation for some time to research what the skeptics say about Kai-Zen and try to answer those concerns and see which ones are legitimate and which ones are not. And I think I've done a lot of research and come up with a good job. Hopefully you enjoy it and it's helpful. Get my clicker working right, get the thing at the bottom gone. All right. Here, I think, are the common concerns about Kai-Zen. 9 of them. Skepticism towards life insurance as an investment. Complexity of the structure. Suitability and accessibility. Policy performance assumptions. Leverage risk. Lack of transparency. Liquidity and flexibility. Costs and fees and regulatory concerns. Does that sound like a lot? I think I saw concerns on the internet as I searched around. These are kind of the concerns I found, and I think I'm going to address them all. Let's get started. This is a new slide I'm using with the alchemy presentation. I am the alchemist. I married Barbara Sue Halls from Salt Lake City. We have 7 children and 28 grandchildren. I graduated from BYU, and we are avid fans. I was an investment advisor for 35 years. I believe retirement is the freedom to do what you love when you choose. That's why I'm doing what I do. Our passions and values: we love to travel, visit family, vacation together. We read books, we go to plays. I even build Legos. We serve in the temple and strive to be disciples of Jesus. I love the business world. Business has always been in my DNA. I believe in doing good and helping others. This quote, I found this quote from John Wesley, English cleric and theologian. Do all the good you can, by all the means you can, in all the ways you can, in all the places you can, at all the times you can, to all the people you can, as long as ever you can. Well, that's what I want to do. I enjoy providing Kai-Zen, this retirement strategy and income strategy, to people. Overcoming skepticism through understanding. Here's some interesting quotes I found about skepticism. Skepticism is the first step towards truth, but blind skepticism is the last. You know people that kind of don't have an open mind. Well, skepticism is the first step towards understanding. People are usually more convinced by reasons they discover themselves than by those found by others. I hope to help people in my Kaizen presentation and even today begin to understand Kaizen. Understanding is the first step to acceptance, and only with acceptance can there be recovery. J.K. Rowling. A mind is like a parachute. It doesn't work unless it's open. If you have an open mind, I think you'll really like Kaizen. So here's the steps we're going to look over, and let's get started with number 1. This is my disclosure that you need to be aware of. While some may perceive life insurance as an investment, from a regulatory standpoint, it is not classified as one. Traditional investments are regulated by the Securities Exchange Commission, SEC, and Financial Industry Regulatory Authority, FINRA, whereas life insurance is regulated by state insurance departments under the guidance of the National Association of Insurance Commissioners, not federally regulated. Although certain life insurance policies, such as indexed universal lives, may have cash value components that experience growth, they are still classified and regulated as insurance products, not securities or investments. So I was making the claim and found out it was improper to say transforming life insurance into an investment. Well, if I do that, then I have to be regulated by a different source. I can say transforming life insurance into a growth asset for something else, but or investment-like features, but it officially, regulatory-wise, is not an investment. So skepticism towards life insurance as an investment, that's what the concern was. And first I'm saying it isn't, but it has some great components that look like an investment. But here's the unique advantages of life insurance. They're really valuable. First, we buy it to protect our family, our loved ones. That's the number one reason. In the 1980s, insurance companies started bringing on living benefits. You could have disability coverage, critical, chronic, terminal illness, long-term care coverage. What a benefit to these advantages of life insurance. And then the tax advantages. When income tax began in 1913, from day one, life insurance benefits paid to beneficiaries are tax-free. And they grow tax-deferred before they're paid out tax-free. And we can borrow from these funds without paying a tax. That third part is how I can give you a tax-free retirement, by borrowing. Another issue is low fees. There are life insurance expenses for sure, but there are no advisory fees and minimal management fee costs, which is a major advantage. There's the four major advantages to life insurance. 2, index universal life. The big deal about this product is there's no downside. A large portion of the cash value is held in the insurer's general fund, protecting it from market losses. It's in bonds. And if they put in $1,000 phase, so if they put in $900, it grows back to the 1,000. And then market link growth. With the budget they have, they buy options to replicate market-like performance, allowing upside potential without this downside risk. Whew, that's a big deal. Just to go back, if we have tax-free benefits and we have no downside, we have market-linked growth, wow. And there's the third piece of Kai-Zen. Kai-Zen is leverage, is borrowing money, carefully managed leverage up to 3-to-1 ratio to optimize performance with borrowed funds. Structured through a trust company as an intermediary between clients and the banks. This structure eliminates the need for collateral, personal guarantees, loan documents, interest payments, or credit checks. So tax-free, no downside, market returns. Why wouldn't we borrow? And that is what Kai-Zen is. Skepticism towards life insurance and investment. It is not an investment, but it certainly looked like it has some pretty good performance with this strategy. And we'll answer those other issues as we go. So complexity of the structure. The criticism involves multiple parties, making it more complex than traditional products. Well, the structure includes multiple components, and let me show them to you. Here they all are. First, we have the ownership, the insured. Nothing different there. Then we have the advisor, myself, and the founders of Kai-Zen NIW. We're the advisors. Then we have the life insurance company that we're buying the policy through. Then we have the master trust. The master trust manages the structure, ensuring compliance and proper administration. They're the loan coordinators. The master trust arranges the loan agreements with the banks, streamlining the funding process. And that's not one of the, so we have four entities: owner, the advisor, the life insurance company, and the master trust. We really only have the master trust as the additional one in a normal life insurance policy. Then I put down there the payment schedule that's involved there, and I wanted to just put down once the bank is repaid after 15 years, the master trust is dissolved and you assume full control of the policy. We eliminate one of them. So I don't know that the complexity it's not that complex to me. What do you think? Suitability and accessibility. Criticism limited to high income net worth individuals, leading to exclusivity concerns. Well, I'm sorry. This is true. For this thing to work, you have to put a pretty, I guess some people would say it's a sizable amount. Let me go to the qualifications. So here's the qualifications. You've got an age range, 18 to 65. If you're over 65, they will not sell it to you. It's done. I'm over 65. Can't buy it. Health must be qualified as standard or better. You gotta be insurable. Financial criteria: minimum annual income of 100,000 and sufficient net worth. I actually pull that to lesser words, but Oleon says a higher criteria, but it is pretty high for this purpose. And then you just have to have the financial capacity to make payments, and the minimum is 20,000 to 40,000 based on age. And then you have to have the commitment of 15 years, 10 years for funding, 5 years for growth. So is it exclusive? It's exclusive to those who can afford it, number 3, and number 4. So yes, I confess. Okay, policy performance assumptions. Reliance on index universal life performance. Well, we are the performance within the policy. Optimistic return assumptions. Well, we'll have to let you see if what we're doing is too optimistic. I'm going to cover a number of these at one time because they're kind of all blended in. So we're going to also cover leverage risk, the criticism. Loan introduces risk. Well, kind of. But we want to show you how that works a little bit, especially of market underperformance. We're going to cover that. And the last I'm kind of doing all together is lack of transparency. Skeptics might claim that Kaizen's reliance on specialized advisors. Well, I guess I'm a specialized advisor. It takes some understanding. And third-party lenders, we have to find the banks that will make the transaction. Creates a lack of transparency in fees, obligations, potential risk. Well, we're going to show it. We show it all to you. It's totally transparent. If you don't look closely, if you don't try to understand it, you would probably, okay, I don't get this that you're just not transparent enough. So we're covering 3 of these all at once. So let's get started. Here's some current index comparisons within all eons. And I have to explain a little bit of the details of Kai-Zen, which we're trying not to do too much today. But they have 5 options. They have an S&P 500 index that's capped. See the 12.5? That's the current cap, and the current participation rate of 100%, and the 10-year average is 8.2. Well, if you were in the S&P 500 in that 10 years, you'd be about 11. So there is a little bit lower return with no downside and the cap. Now, these other 4 have no cap, but they have a participation rate. And if I go for the right side back, the first one, PIMCO, has a 190% participation rate. It's a volatility controlled index, conservative, and with 190% participation, you'd have 8.74 for the last 10 years. Not bad for a low risk index. Bloomberg is the same. It's a volatility controlled index with 195% participation, and it's averaged 9.07 over the last 10 years. Then we have these next 2, the ones in the middle, were new this summer. Now they back tested the performance and everything, and the one we're giving a blended futures, we're giving 120%, and the back testing would show 8.87. And then the S&P 500 futures index is 80% participation and has an average of 10.82, closer to the 11. If you were blending all the 4 on the right, you'd have a blend of 9.38. Would you accept 9.38 knowing there's no negative years? I would. The 11 in the Standard & Poor's 500 is certainly a more volatile thing. Anyway, so how's it comparing performance-wise? Here I want to do a hypothetical. This is the hypothetical I do in the alchemy presentation. I have a 45-year-old male, excellent health, non-smoker, annual income $240,000, has $500,000 already saved, and he's willing to do $50,000 annually for 5 years. That's Kai-Zen, 5 payments. And then we're going to show a distribution. We're going to show him a retirement plan beginning at age 65 and continuing through age 90. Our illustration software, we can do whatever. We can do a different age of 65. We can do a different age to 90. We can do 100. We can do whatever. We can start at 50, whatever, and they'll illustrate the numbers. Then here's we're using an illustration rate of 6.72. This was the rate dictated by the NAIC on January 27th. I didn't check this morning, but I'm sure it's the same. Is 6.72 an okay assumption to illustrate with? Yes, from what we just saw. It's lower than the average performance recent last 10 years, but it's an okay return. We're going to show income tax rate of 37%, long-term capital gain of 20, and a state income tax rate of 5.5, which is about the average in the United States. So this comparison, this hypothetical, will help you get a comparison. We take a long time to go through this in the alchemy presentation, but if we're comparing this what was that return again? 6.72 in an after-tax investment, paying taxes as we went, We could start an income at of $41,017 at age 65, and through age 90, you'd have $1,066,000. And we used all the money in this illustration because there's income through 90. So at 91 is zero. If we did an IRA 401k, because we're deferring taxes, but paying taxes when we pull it out, we'd have an income of 51. That's better than 41. And it's the same return number. If we did it in an index universal life, we'd have an income of 61,000, more income. And we have a death benefit at 90. We have a death benefit from day one. And if we did in Kai-Zen, when we're borrowing money, we have even more income and more death benefit. You can see that this is a strategy that works. So one thing NIW, the founders of Kai-Zen, do, they stress test these things a lot. And the two major stress tests that they very proud of, they stress tested Kai-Zen, how we would do in the Depression, where we had sequential years of zero returns from 1930 to 32. Stocks lost 70% of their value, did not recoup until 1959. The Great Depression was simulation. We're showing 9 zeros in this Kai-Zen simulation over a 12-year period. Ooh, I wonder how it's going to do. And then we simulated in the 1980s, where interest rates got up to 16.88%. Well, here's the stress test. The 1980s, $73,500. Wow, that's better than the after tax, the tax deferred. Oh, the index universal life without the borrowing. Wow, that's high interest rate economy, the worst. And then the Great Depression, 63,700. Higher than the 41, higher than the 51, higher than the index universal life. The borrowing, even in the worst of times, worked. The first policy of Kai-Zen was issued in 2012 by one of the founders. And Grace Bernard, she allows us to use her statement to show you her June 26, 24 statement. She gets an annual statement, showed she's averaged 7.73 from day one in 2012, and she's averaged 3.81 in borrowing costs. So she has a pool of money of her own in that policy, earning 7.73. Then she has all the borrowed money in there that she's making she's made 3.92% on borrowed money. Backtested spread. We backtested this with Kai-Zen does a lot of backtesting to 1930. There's never been a 15-year period of time with less than a 2% spread. As long as you're a long-term investor, you can plan on a 2% spread. We're showing a 3.92 for the last, what we got, 11 years. And in that period of time, we had these 0 years. We had negative years, but that's pretty comforting, the spread that she's received. Here's her statement. So Grace Bernard shows her death benefit at the top, her current cash surrender value, estimated death benefit, and along the columns, it shows the return she got every year. You can even see that 0 in 2021, 22. You can see the interest rate she paid. She even the higher interest rate in 2024. And you can see the payments she made, the trust fees that she paid. She paid the bank contributions and the values. And there's her summary on the right side, her 7.73 and her 3.81. So did we do a pretty good job on those three policy performance assumptions? We showed the NAIC rates that they allow. We showed past performance. We showed the leverage, performance, and risk. I think we were transparent in showing how things probably will perform and we have performed. Let's go to the next ones. Costs and fees. The criticism, mortality charges, insurance costs, administration fees, loan interest could erode cash value. Well, that's a legitimate criticism, and you need to have a comfort that it works. I'm putting another one together with this in liquidity and flexibility. Criticism, limited liquidity, potential surrender charges in early years. You do have limited liquidity. This is a legitimate criticism. It's not for someone, it's not a day trade for sure, not a year trade. We're asking for some time. Let me show you the numbers. Let's talk about the investment world fees. So exchange traded funds, on an average, their internal fees are about 0.2. Index mutual funds, about 0.12. Actively managed funds, 0.89. Hedge funds, 1.5 with performance fees. That 0.89 has come down from when I started in the investment world. And ETFs were not even around in 1983 when I was starting. So internal fees are more competitive in the investment world. Advisors, that's what I was. I charged the 1% for my time in helping people. So in the investment world, you pay 1.12 to 2.5. Actively managed fund and advisory 1.9. So let's just say, I don't know, you can say 1 to 2. So what are the costs in a life insurance? This is Allianz. They have a premium charge or premium load for 10 years, covering the insurer's administration costs, such as issuing and maintaining policy. They didn't say it, excuse me. Commissions are in there, such as issuing and maintaining policy. Yes, commissions. They charge that for 10 years. They have rider charges, if there is riders, for 12 years. They have a per unit charge, helps cover the insurer's cost of providing the death benefit. I don't really like the name of that one, but that's what they call it. Then they have cost of insurance through age 95. And if you look at the illustration, you'll see it drops off after 95. You paid all your insurance costs. Then a policy fee, pretty minor, offsetting expense for policy maintenance, such as record keeping. Let me show you a policy statement. So this is a Kai-Zen, and it's not all the whole illustration. That premium outlay is both the investor's outlay and the banks. And in the 5th through the 10th year, it's all the banks. But you have the premium charge, you have the per unit charge, you have the policy fee, the cost of insurance, the rider charges there, they all are listed, and you have a total on the right. So this is me putting some numbers on a spreadsheet. I times it out, and that first year, your total charges to the premium outlay is 18.8%. Oh yeah. So we make 10% on the investment, we're still losing. Yes, this is not a short-term investment. Second year, 7.45 on the assets invested, lower because there's more money involved in invested, and it just keeps going down. But amazingly, at 8 years, we're 1.96. Remember those fees of investment of, we got 1.12 to 2.5 to 1.9. Well, because there's no advisor fees, there's not much management fees, but you paid for, in the early years, your insurance costs. Now the expenses start to go better. And I just listed those, and through the 20th year, 0.27. Well, you'll never get an advisor, anything like that. So over time, it becomes very, very competitive. And you're buying insurance and you're paying for it up front. And it's going to be there all your life. I don't think it's a bad exchange. Wow, here we are. We're getting to the end. Did I cover those pretty good? Hopefully, if you have some suggestions on a better way to present it, I'm happy. This is the last one. Criticism, regulatory concerns, questions about compliance and overpromising in marketing. NAIC, National Association of Insurance Commissioners, they do not want the insurance industry regulated by the federal government. They're going to be bending over backwards to keep the insurance industry not regulated by the SEC or FINRA. They want to be regulated by themselves, an association of insurance commissioners. And I could tell you some cool stories of things they've done to protect people's investments and their money. Oh, I shouldn't use the word investment, should I? And you saw the NAIC performance number that they were allowing us to use right now. They don't want overpromising. They don't allow us to overpromise. That is good. It protects you. It protects me from other advisors that are not honest. I'm very happy with NAIC and their regulatory oversight to keep the insurance world safe and functioning for clients. So, conclusion time. Kai-Zen, you didn't get all the details today, but you got a glimpse of it. Kai-Zen is a strategic, well-structured approach to financial security. Safeguards in place to mitigate risk. Complexity is a strength when properly understood. Encouraging informed decision-making through education and transparency. We're not going on my software today, but we have a secure portal where you can play with numbers, and you can, if you give me your name, cell phone, email, and birth date, I can send you an invitation. I think next month I'm going to do a webinar on those the software and show how they function and have fun looking at that. But that's it for today. It's been a short webinar. I hope you have a great day. And oh, one more thing. My next dinner presentation, grab my calendar, is the 26th of February, a Wednesday night at Roosters in Layton. And the invitations just recently went out, so that it's not full yet. They all have been full, all the presentations. But if you'd like to attend, there's no pressure from me. It's educational. I just want to help people with their retirement, help them with their lives, have a better life. If you want to come, give me a phone call and we'll book you in. And have a great day. This is Jim Barlow for OakTree Premium Finance. Remember, I'm the alchemist.